Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to start off with Apple. Apple is arguably the most valuable company in the world, but it hasn't been doing very well lately. And what I mean by that, we did have a big drop from the highs seen right here, and that was a negative engulfing line confirmed the next day, indicating that this was a top. When you have a candle that engulfs the previous line, now let me explain what that means. If you have a red candle in this case, and it totally engulfs the previous day, which is right here, with total red from here to here, that's the full body of the candle, and it closes lower the next day, it's indicating that a top is in place. And of course that's what happened. Went all the way down rather dramatically below the 95 level, and then we bounced back, and we sort of, since that time, we sort of just meandered back and forth. But one thing to remember, that the monthly and the weekly trend is still positive. The only one that's not quite zippy is the daily. We don't pay that much attention to it, but we do have a 65 score, which means it's a trading range. And we're also back down right here on the 50 line on the RSI. Now, I wouldn't like to see Apple close much lower, because if it does that, it's going to go below the 50 line, much like it did here. And you can see that it took it a while to get back over the 50 line. So again, I would be very, very careful right now. The one level I would look at in Apple is 118.10. If we go over that level, I think we'll see another pop, or at least a challenge to these highs. But you can see we put the parabolic in here, which is right this line you're seeing here, and we're below that. So that's indicating more of a two-way market for the time being. So haven't lost total faith in Apple, but I think it's maybe lost some of its coolness. The iPad, the new iPad that just came out, then you can order online or get it in the store. I'm not so sure it's going to do as well as they expect. It's a much higher ticket item, and I don't think people need humongous things to carry around with them. So I could be wrong, but we'll see what happens. Hey, let's move on to our next market. I thought we'd take a look at Netflix. It's a little bit higher today, and it is challenging what we consider to be a key level. The one level we want to look at in Netflix is right here, and this is going to be, I'm going to write this on the screen so you can see it. This area right here, if we go to 115.83, I think that's going to be enough to challenge this market to move up to the 130 level, which is pretty much where we were here, or even the 130. So I'm going to say 130 to 135 if we go over this level right here, because you've got that sort of double bottom pivot point that we like so much, and that would flip that over, and that takes you up to these levels right here. It's about a $20 move. Again, you're over the 50 line. You are in a plus mode and everything at 85, so it's a little stronger than the Apple. It's 65, but again, I think it's going to start to pick up momentum. These guys do a great job at delivering either streaming or hard disks to your mailbox. I mean, it's as simple as that. So let's watch that very carefully. But the 115.83 level is the key level to watch. Thought we'd take a look at gold. Gold's under a bit of pressure. We had a signal there on monthly indicating that the trend is down at $1,081.34. Where we've had a little bounce since then. We are very oversold. You can see like right here and right here, back here. So I think we may be in a similar situation, but nonetheless the trend is down. You have to respect the trend, and it really has gone straight down from the highs of $11.90 down to almost $100. So let's see how that plays out. We were looking for a cycle low, and whether that comes true, I want to give it a little more time to see what happens. We will rely on our weekly and our weekly and our daily for giving us a signal on gold. Okay, looking at the Dow, we have two positive signs here, the monthly and the weekly, but we've had a pullback from the highs. We're getting very close to the 50 line, which should give us some support. The one argument we've been using for some time now, why we think this market's going to have a hard time, is this resistance zone. We talked about that, and I think that's still going to be a problem in the near term. We're below the parabolic, you can see right here, and we may see more backing and filling here, but we'll have to just see where we come in on some of the signals that we are looking for. Again, the RSI below 50 would not be a good sign. If we get a red weekly trade triangle, that would not be a good sign. So let's pay close attention to the Dow index. Okay, we're looking at the next indices is the S&P 500, and again, the same challenge there is the fact that we have this huge amount of resistance that's over the market, and I think that's going to be very hard to overcome. We've had the pullback, not unexpected, but the key level we're watching here is the support level right around 50. You can see it right here, and also watching the weekly. If that turns red, and I'll be able to give you a better number on that tomorrow, but if it turns red, then I would be a little bit suspicious of this particular rally. It's a lot of uncertainty in the market, and of course that's what's causing these markets to be choppy, and a 55 range on here is a trading range. It's not a strong trend, it's just a trading range right now. The Nasdaq is a little bit different. You see a minus 55, but the monthly is still down here. It hasn't turned over like the S&P 500 or the Dow. It's still negative. We're over the 50 line, so that should be looked at as some sort of support zone for this market, but we're below the parabolic. So I think that the resistance, again, it sounds like a repetitive situation, but this is the concern I've had all along, is this resistance level, and I think that's been enough to halt the market, at least for the moment. Let's see how it plays out. But again, a 55 score is a trading range, and I think you should look at it just like that on the Nasdaq for now. Looking at the US dollar, we against the euro, we talked about the 108 and 107 level. Well, we got there. Certainly it's bouncing from there. And what Mario Draghi said today about more easing for Europe, I think that we may see a bounce from there. Again, we're very heavily oversold, and you can see that right here, and it was of course very similar to this level right here. We did see a bounce, so I would not be surprised to see a bounce coming in this market, but we need to see something happening in our weekly. That's what we use for our trend, but the daily's turned up, indicating you should be on the sidelines in this market. It's reached our goal. It's 107.89 was the high. It's about a little bit lower than that right now, but generally speaking, we want to be on the sidelines in this market now with this conflicting weekly and daily trade triangle. This is crude oil. This crude oil does not look good in my opinion. You have a situation where you have all of our trade triangles are red, minus 100, strong downtrend, and these are the two to look at, the weekly and the daily. This is the daily right here, and this is the weekly. So the weekly gives you the trend, and the daily gives you the timing. So right now, this is going below this point right here. It does not look good. I would say we're going to test the 40 level. That would not be so out of the realm of possibility. We are getting to an oversold condition, but that can last for quite some time. You can see that right here, how it stayed oversold for a long, long, long time. So we're looking for this market to go to 40, maybe even down much lower. So let's see how that plays out. Hey, I'm Adam Hewison. Thank you for taking the time to watch this video. We appreciate it. If you have any markets or stocks you'd like us to follow, please leave a note below this post, and we'll do our very best to cover it in our next video. Have a great trading day, everyone.